next target. And I had mentioned in my previous video, Antero Midstream Corporation, a company of the energy sector, oil and gas midstream, here off the daily interval on the 11th of April 2023, where we're trading spot price $10.63. We had this primary reactionary high downtrend line coinciding with the 1070 price resistance up above here. Call it a dual line of resistance, where we had this reactionary primary reactionary low uptrend line, primary trend line, sort of in this symmetrical triangle looking pattern here. We had basically just a dual line of resistance, hardly any divergences, where we had key momentum indicators coming up on their zero line thresholds. And here's the update. The entire trade was good for call it an 8.4% crash there, especially if you were taking some of the short trade positions, scaling in amongst that 1070 price resistance, where we came out. We ended up back testing multiple times here. We had a false breakout, momentum fueled overshoot, where we had the daily interval close right below it, rejected very impulsively, back tested this primary reactionary high trend line, snapped both the 50 and 200 day moving averages, and a key inflection point off this, what you would call a death cross bearish continuation inflection point. We ended up back testing this 1023 price support 1, 2, 3 times, came out, opened up, back tested one last time here, and it never looked back.
Call it to the Benjamin button. I might even have to rename to the channel to the Benjamin button.
Especially for an active and or day trader, you could have taken this quick scalp to the upside, call it a 2.6% in gains just in one day there. Multiple reactionary highs, have huge volume price indication around this range, so the buyers definitely did step in, especially if you caught that trade right at the bottom. Hey, you could scale in yeah, that scale in moment, and you could let it ride. There's a chance we could maybe even start rallying to the upside and knock up on that price resistance all the way to the top of the 1023, especially if you're planning on a swing trade to the upside. Oil's starting to look good, I believe, on the charts. Anything's possible, but both traders and buyers, they need to defend this primary reactionary low trend line really at all costs. This is now heavily validated here, with multiple reactionary lows right across the board and a massive key inflection point coinciding with the 382 Fibs retracement, called 960 price support there. So if we have a solid daily candle close below, I would only take that as a sell signal on all proportions, with crossovers already confirmed on both MACD and oscillator, starting to test at zero line. We do have the histogram oscillator with a nice candle red close down below, so it was some damage has been upon, and really what happens is there's a ton of momentum indicator damage here, whereas you have we're at a key inflection point with that death cross, and when a death cross usually come entwined with one another, you're either going to bounce and avert this death cross continuation pattern, or you're going to confirm it. And if you confirm it, I believe a snap of this primary uptrend line will ought to do it, and that will usher in a pretty heavier selling, I believe, down to the downside, at least back down to that 920 price resistance. Anything is possible if you're a long-term holder in Antero Midstream Corporation. These are your key levels, dollar cost average down. If you're a firm believer in the long run, this is where you average down amongst all these key levels. So we'll see what happens. It was a great trade thus far. Keep you updated if I see more significance here in the charts.